Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what is the difference between stock market and trading? Answer by Khushi Gupta. Well, the stock market, or stock exchange, is a place where stock, or shares as we call in India, are traded between investors at a particular price that is purely determined by the demand and supply of the shares. In India, there are two stock exchanges, viz. The National Stock Exchange, NSE, the Bombay Stock Exchange, BSE. Trading involves the buying and selling of financial instruments. These can be cash instrument, like shares/stocks/bonds. They can also be derivatives, such as futures or options. For many people, this is the first thing that comes to mind for investing. Whatever the instrument being traded, the intended outcome is always the same: to make a profit. To do this, you usually buy low and sell high. If you sell an instrument for less than you bought it, you'll make a loss. Visit FAQ on stock market. Hope this helps you. Answer by Ari Gupta. Stock markets have existed in some shape or form all through history. Back in the day, traders placed orders in person while hanging out at coffee shops. These stocks were handwritten. Unlike today's stocks, which you can virtually buy and sell from the comfort of your home, the marketplace moved from informal coffee shop trading to floor trading, where brokers would facilitate the buy and sell of stocks in a dedicated space called the stock exchange. Traders would yell across the trading floor, following what is technically known as the open outcry method, and announce the number of stocks they either want to sell or buy. The prices would move up or down depending on the market forces of demand and supply. After the wave of dematerialization, all shares are now held electronically in demat accounts. Traders and investors who previously carried briefcases full of carefully stored share certificates can now be found glued to their chairs, staring at multiple screens running sophisticated trading softwares that help them monitor the pulse of the market. The stock market is not only a place where one can trade in shares of publicly traded companies, but also a platform to invest in corporate bonds, government bonds, debt instruments, etc. The equity market is the primary market where you can directly invest in the company's future. Then, there's the derivatives market, i.e., is the secondary market where you can trade in futures and options. Another segment within the stock market is the commodities segment, where you can invest in commodities such as agricultural produce, metals, natural resources, etc. It is important to remember that stock market is just the marketplace. Trading is the actual act of conducting a buy/sell transaction within the marketplace. Both cannot exist without each other. Trading takes place within the stock market. Trading can be of different types. Intraday trading. Intraday trading is when you purchase and sell a stock within the same day. Traders who are interested in making quick profits thanks to the daily price movement usually engage in intraday trading. Delivery trading. Delivery trading is when a person places a buy order today and holds onto the stock either overnight or for a few days before selling it. These types of traders are called swing traders, who are interested in making profits from the price movement seen for a duration of a few days. Answer by Mahi Raghuvanshi. Stock market is a market where different equities or stock of different companies are issued and traded over the exchange. Thus, stock market is an organized place where different trader or investor can buy/sell the securities or stock of different companies. While trading or investing is an act to receive a future monetary benefit of the stock market through performing the buying and selling of a particular stock or securities according to support and resistance of securities. https://www.ways2capital.com/